money work for you. And this is essentially the first rule you need to understand before investing into anything, before investing into a business, before investing into the real estate market, before investing into the stock market. You need to understand that in order for you to make your money work for you, you need to invest. Just like anything in life, we all get up to go to work so we can work for our money. But how do we make our money work for us? That's when you invest. You invest your money in order for your money to work for you. So that's the first rule we need to understand, that in order for our money to work, we can't have it just in a savings account or even under our pillow. We need to invest it in an investment portfolio where it'll keep growing for us. If you were to have it into a savings account or under your pillow, it's a depreciating asset because of inflation. So investing is essentially another term for making our money work for us. So when you invest, make sure you're investing into a portfolio that keeps growing for you. One of the safest investment there is in the world is, that's right, you got it, real estate. Real estate investing. Real estate investing is one of the best ways and safest way to grow your savings. By investing in Canada's in-demand housing market, you can rely on long-term growth that outpaces the rate of inflation and security that other types of investments like stocks cannot offer. The best thing about real estate investing, besides being the safest investment there is in the world, is that you get 3 things from investing in real estate. Number 1 is leverage. Number 2 is appreciation, and number 3 is cash flow. But on top of all those 3 valuable things that we have to keep in mind when investing in real estate, the number 1 thing about investing, which I love, and that's why I'm an investor, is the control of owning your own asset. Meaning that the market can go up and down, but you just sit there and watch it, and you decide when to sell or when to buy. Leverage, and leverage is why I'm an investor in the real estate market. And this is why I love real estate after everything else. Why? Because if you were to invest in the stock market or even in a business or even in anything else, all you're actually accumulating and appreciating is based on the investment you invested. Meaning that if I were to invest in the stock market $100,000, it's only appreciating based on the amount that I invest, in this case $100,000. But if I were to invest in the real estate market, now that changes. If I were to buy a home for $600,000 and I only put $100,000 as my initial investment and the total investment, my portfolio is not only just appreciating on $100,000, and guess what? It's appreciating on $600,000. So let's say, for example, you have a 5% return or a 5% appreciation on $600,000 compared to $100,000. Which one would you choose? That's why the power of leverage is the reason to invest in real estate. Appreciation refers to the increased value of a property over time. Things that can affect the appreciation rate are market demand, supply levels, or interest rates. Fortunately, Canadian real estate has been steadily appreciating for many decades. Appreciation in the real estate market means that your property is appreciating year over year. Now, we can't just look at appreciation from one year to another year. Appreciation is going to be long-term, and looking at the Canadian real estate market for the past 30 years, appreciation has been over 7%, which means that your property, not the investment that you invested in, but your property, the property that you bought for $600,000 and you put down $100,000, has been appreciating 7% year over year for the past 30 years. And yes, a lot of things can affect the appreciation, meaning that one year it can be high, one year it can be low. But real estate is not meant to look from one year to another year. Real estate is meant to be looked at in the long term. And looking at the long term, appreciation just keeps increasing when it comes to real estate. What does cash flow means in investment? Essentially, cash flow, what it means is that you want to make sure that the property you're investing in and the rental income that you're getting covers all your expenses. That means your property taxes, your mortgage, and your maintenance. Whenever your rental income does not cover all your expenses, then you're negative cash flow. So what I essentially tell my clients, and even myself, because this happens to me too as well, that I'm not really just investing because of cash flow. At the beginning, it might be breaking even, or it might be that you're losing a bit, but as time goes by, just like I keep saying that real estate is long-term, that cash flow keeps growing. That's why investing in real estate is the best investment, because after 25 years, with a little down payment that you put, you're gonna have somebody else pay down something that you will own after 25 years. And on top of that, cash flow will increase years after years to actually even just collecting money with little expenses, and that money is your passive income. This actually helps you for your retirement or even to help others after investing. Passive income. Passive income is one of the goals and reasons why people invest in the real estate market. Let me explain why. When you're investing in real estate, you're going to have expenses, and then you're going to have the rental covering your expenses. But as time goes by, that rental is going to be increasing and mortgage payments are going to decrease, which means you're going to have less expenses and more rental income. That is called passive income. And after owning the property for so many years, let's say 25 years, you're going to collect that passive income year after year. So a home doesn't just only appreciate, but it gives you money, passive income year after year. And this you cannot get in any other type of investment but real estate. Return on your investment. The ROI is a percentage that tells you how profitable an investment is. Let me explain. So after paying your expenses, you have cash flow. Let's say in this case, you're getting $1,000 of cash flow a month. What you would do is take the $1,000 of cash flow a month divided by the initial investment you invested. So in our example, we invested $100,000. So you would take $1,000 divided by $100,000 times 100 is your ROI. And as years go by, your cash flow will keep increasing, which means your ROI will keep increasing. And that's why investing in real estate is very profitable, because the ROI will keep increasing year after year. At GTA Homes, our goal is to provide real estate education and investment advice to help clients achieve long-term success. Remember to subscribe and to visit us at gta-homes.com.